Hi guys, good morning and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao, and over the next half hour we'll help you navigate today's trading session. We'll help you prepare better before the markets open with actionable strategies, sectoral trends, and most importantly your queries during the show. So please keep commenting on our feed. We'll have your questions addressed towards the latter half of the show. But before we kickstart, I want you to get a sense of how the global handover has been. So let's take a look at that. As far as Europe is concerned, well, we all know that the handover was fairly weak. But if I look at the US closing stock futures, once again are flat after major averages posted consecutive weekly losses. Dow Jones was down 0.9%. S&P 500 shut more than 1% lower. Nasdaq was also down 105 points. So clearly, I mean, you have a weak handover, and not just from the US but also from the European markets also ended the week lower. Following central bank's announcement, you had DAX down 0.7%, Stock 600 was down more than 1%, FTSE was lower by 1.3%. So across the board, following the hawkishness or the aggressive tone of central banks, ECB as well as Fed, you had the European markets also shut shop pretty much in the red, deeply into the red actually. But okay, let's move right on and talk about today's markets and how things could look. On Friday, we saw the SGX Nifty slip below 18,300 mark. So let's see how the technicals are placed. Rajesh Palvia is with us from Axis Securities. Morning, Rajesh, and thanks for joining in. Can you tell us how the setup is looking and what kind of an indication do we have as far as our benchmarks are concerned?
Good morning. So in the last week, we have seen a significant supply pressure was there in the market, and on the weekly chart also, Nifty has formed a bearish candle with a long upper shadow, which clearly indicates that there is a sustained selling pressure at higher level. In the previous week, we have seen that in Nifty is now trading below 20-day moving average, which is also adding up the bearishness on the near-term setup. A lot of call writing activity has been seen at 18,400, 18,300, even 18,500. All three strikes have witnessed a lot of call writing, which is clearly indicating that supply pressure is likely to continue on the higher side for any kind of minor pullback action. On the other hand, 18,000 is the major put concentration, which is likely to act as a good support area for this decline. So looking at the overall near-term setup, we believe that some pressure is likely to continue in the Nifty until Nifty not manages to cross above 18,450 level. We will be having supply pressure for any minor pullback action. So as of now, sell on rise is the strategy till we are trading below 18,450 mark. On the downside, we are expecting 18,200 followed by 18,000 are likely to act as a support area where one can book profits for their short position. If we look at the Bank Nifty setup also, Bank Nifty is now trading below 43,600 level, which was very important, support area for Bank Nifty. But now Bank Nifty is also given a breakdown of those support area. Looking at the setup for Bank Nifty, we believe that 43,000 to 42,800 are the next major important support area on the near-term basis. So some more pressure we can witness in the Bank Nifty also because call writers are now aggressive at 43,500, 43,600. All these strikes are having major call concentration. So this concentration will keep on continuing the pressure on the market for any pullback action. So for Bank Nifty also, we are expecting some downtick towards 43,000, even 42,800.
Okay, all right. Let's also take a quick look at some stocks that could be in the focus today. Now, I want to start with IT stocks. You had Accenture's Q1 constant currency revenue growth coming in at 15% year on year. Revenue in constant currency term was at $15.75 billion. There was a 5% growth in dollar terms as well. Operating margins also expanded by 20 basis points YOY. However, there was a decline in new bookings. $16.2 billion is where it was perched at, down 3% YOY and 12% on a sequential basis. Now, of course, we could we typically see some reaction coming by, after Accenture and global IT giants also give their forecast for future, give their earnings report, etc. How are our own IT companies looking, Rajesh, on the technicals, especially the heavyweights?
So if we analyze the Nifty IT index, again, whatever pullback action we have seen in recent past, again, meeting out the supply pressure, and now it's trading almost near to its December swing low. So if IT index breaks below 28,500 level, then possibly this supply pressure may extend, and we can see furthermore corrective action in the IT space. IT index can correct up to the level of 28,000, which is the next major support area for IT index. If we talk about all large cap IT stocks, though we have seen pullback action, but now again, most of the IT stocks are witnessing a supply pressure. If we talk about the TCS, TCS is now slipped below its 50-day moving average. So which is again, adding up the bearishness on the setup. And we believe that, if it continues to remain below 32 80 level, then possibly furthermore supply pressure we can see in the near term, and it may slip further below even 3200, even 3160 level, which are the next important support area for TCS. Even on the other large cap, Infosys is also now slipped below 50-day moving average. So looking at the setup for large cap IT, there is no as such, sign of buying action. Most of the IT stocks on the large cap front also witnessing a supply pressure, and we believe that, furthermore selling pressure we can see in the near term also, and another 3 to 4% correction we can see in the near term basis. Some of the mid cap ITs are showing some bit of buying interest, and some stocks are trying to hold their breakout level, which we have seen in the recent past. So stock like LTTS is looking attractive from the mid cap IT. So again, at the current juncture, we will suggest to wait and watch. Let the some supply pressure to absorb at certain level, then try to buy this mid cap IT. But the time being, avoid large cap IT because the structure is weak for large cap IT stocks.
Okay. I want to rope in Gaurang Shah also into our discussion on especially IT companies. Gaurang, hi, morning. How are you reading into the fundamentals of IT companies, especially, the ones that have started witnessing some pullback in the recent past, but again, because of the overall weak market momentum last couple of sessions, again, they have started languishing. But from a fundamental standpoint, how should one approach IT right now?
Thank you, Karanya, and morning to all of you all. So, as a brokerage house, we at Geojit still remain positive on the IT pack. We do consider that the third and the fourth quarter for this financial year could see a little bit of more pain the way we have witnessed in the earlier quarters. But come next financial, our sense is that post the verbatim given by most of the IT management companies, be it large cap or mid cap, they are quite confident about the deal pipeline. They're quite confident about the margins staying intact and improvement in margins. And if I have to take into consideration the correction that we've seen in the IT index or individual IT stocks, Karanya, and if my view is not 3 to 6 months, but maybe about 16 to 18 months, starting next financial year, then our sense is that you should definitely see turnaround in the share prices of IT stocks on fallback of earnings improvement. And if you do want to invest, what we are advising our clients is that don't go and put all your money at one time. Use a staggered approach to accumulate the IT stocks, starting with your large cap names like TCS, Infosys, HCL Tech, Tech Mahindra, and then possibly going down towards the mid cap IT names, KPIT Tech, Tata Elxsi, LTI Mindtree, L&T Technologies, Persistent Systems, Science, just to name a few, Coforge included. But there is pain undoubtedly for the next 1 or 2 quarters. But post that, I think you are going to see meaningful recovery.
Okay, all right. But overall, if you look at what the market is going through, the very, very extreme sort of moves that are happening after the massive uptick we've seen last few days have been relatively weaker and relatively slow. What should one do in a market like this? Because if we look at the macros, if we look at the big fundamental triggers, they're all not very optimistic, but still, I mean, our markets have run up a fair bit. So is it more of a sell on rise market, perhaps, to make whatever profits you can and exit, or is it a buy on dip market?
So I'm a strong believer about long-term growth story for India, Karanya. And if it is not optimistic, it is not pessimistic either, Karanya. And the fact of the matter is that even if you take year to date, Jan 2022 to current date, I think you've done fairly good. And not to forget, we are in the fag end of this calendar year. There are 12 or 14 odd days left to say goodbye to this year 2022 and possibly look forward to the new year to 2023. If you are short to medium term, if you are seeing money on the table, it is always prudent to book profits, Karanya, because stock markets always reward you with profits, be it whatever your time horizon. But it is up to you not to get greed inside and then possibly look for more and more. And in that greed of getting more and more, you end up with losses. So, I'm quite sure that there is a strong base for the Nifty, somewhere close to about 17,800 or 18,000 on the Nifty spot, and maybe closer to that. And what we've advised, and then our last week market outlook, Karanya, we had also mentioned that markets always consolidate whenever they make a new high. So we made a new high in first week of December, and post that we are in a consolidation zone. And that consolidation zone is anywhere between 18,200, 18,000 on the lower side to 18,500, 18,600 on the higher side. And the more we consolidate on the fundamentals, if you ask me, you make a very strong base for you to last the durability in terms of the elevated levels that we are going to see in the coming year. So buy on dips is the strategy that you should have. If you are a long-term investor, short to medium term, getting money, it's always better to see that money in your savings bank account rather than notional profits on paper.
Okay, all right. Before we let you go, Gaurang, want to understand any sectors or stocks that you guys are eyeing that look attractive from a medium to long-term perspective?
So I think we'll take a contra bet on metals and cement, Karanya, commodity play, and our sense is that consumption is likely to stay elevated given the kind of expenditure that is underway from the state governments and the central government for construction of airports, roads, railways, bridges, expressways, highways, turnaround in the real estate sector, private capex coming through. So cement and metal is one sector that we'll possibly look at. Of course, banking and finance is always going to be the preferred one. Autos would be the fourth one, and defense and, like I mentioned, IT, priority about 5 or 6 sectors. Start nibbling in the frontline names and then possibly look at some mid-cap names.
Okay, all right. Thanks, Gaurang, for joining us there to talk about what's happening fundamentally in the market. Back to Rajesh once again. Rajesh, want to also bring your attention to 2 names from the pharma space. The first one being Sun Pharma. Their Halol facility has got a warning letter from the US FDA with regard to CGMP regulations. And now Halol facility has been placed under import alert by the US FDA. The second name on our list is Shilpa Medicare, which has launched a capecitabine 1000 mg dispersible tablet in the Indian market, and this essentially is used for colorectal and metastatic breast cancer for curing these diseases. Now, talk to us about both of these pharma players. Of course, the news triggers are vastly different, but if we look at the chart of each of them, how are they placed?
So if you analyze Sun Pharma on the long-term perspective, stock structure is bullish, and if you look at the short to medium-term perspective, some weakness is there on the weekly chart. Since last 4-5 week, we are seeing that some supply pressure at higher level, but still for long-term, yes, if any minor dip comes in the stock towards 950, 940 is an opportunity to buy again the stock because overall structure for the stock is on the bullish side. Series of higher top higher bottom formation is there. So we believe that if any dip comes near to 950 940 zone is a buying opportunity. Maybe because of news flow some pressure we can see in the stock, and it can slide further from the current level. So till stock not crosses about 1020 mark, it will remain under some pressure, and maybe lower side 950 940 could be the zone where again some support buying we can see in the Sun Pharma. If we talk about Shilpa Medicare, stock is continuously forming lower top lower bottom formation. Stock is in downtrend. Stock is now trading below to its March 2021 swing low, which is clearly showing that continuous supply pressure is there in the stock prices. Looking at the near term as well as short term setup, if stocks breaks below 265 level, then furthermore supply or furthermore downside we can see in the stock. So overall structure is weak for Shilpa Medicare, though some news is positive for the stock, but still we believe that whatever pullback will come because of news flow or some positivity through this news, again it will meet to the supply pressure. So our advice is to avoid at the current juncture for Shilpa Medicare.
Okay, all right. Moving on to our last stock on the list. As far as stocks and news are concerned, there's dilipbuildcon, which is bagged an order for Telangana road project from the NHAI. The worth of this project or this order is around 1650 crore rupees. So some good news coming in for dilipbuildcon. But if we look at dilipbuildcon's move in the last 1 week, it has shown a bit of a positive trajectory, but it's still way far away from its 52-week high. So talk to us about dilipbuildcon and the likely way forward. Will it perhaps witness some more pain before sustainably moving higher?
So stock structure is weak. Since last 4-5 months, stock is trying to form a base, but still looking at the near term to short term setup, the stock structure is not that much encouraging. Overall, if we analyze the stock, until the stock not crosses about 270 mark, it will remain under pressure only. On the lower side, the major support for the stock is at around 210. So we believe that some more consolidation we can witness for some more time. In the range of 210 to 255 could be the possible consolidation range. Either side breakout or breakdown will decide the further direction. But if we analyze on the longer term or as well as on the medium term perspective, stock structure is still weak. We have seen series of lower top lower bottom formation. Continuously stock is witnessing supply pressure on higher side. So structure is weak. If you want to buy the stock, wait for 260 breakout, then only you can add this stock in your short to medium term portfolio. As of now, we are expecting some consolidation is likely to continue for some more month.
Okay, all right. Now moving on to the queries part then. We're getting a few queries. Let's first address the one from IT Pack. Vignesh is asking if he can average happiest minds and at what level. What's your view?
So trend is weak, and if you look at the overall setup for stock on the weekly chart, stock is trading in falling channel. If he wants to add or average the stock, my advice would be don't average at the current level. Wait for 880 885 zone where stock is having next major support area where you can average out. Or if you want to buy on the higher side, so breakout level for the stock on near term setup is around 990 level. So if it gives breakout over 990 level, then you can add some position because that is the breakout level on the weekly chart. And if that breakout happens, then stock can show some rally towards 1050 1100 mark. So either wait for 880 zone to average out, or breakout, if it comes above 990 level, then you can add some positions.
Okay, all right. Divya wants to know, how is Amber Enterprises looking for the medium term? What do you think?
Structure is weak after a significant corrective action. Still, stock is struggling to give some significant pullback action for near-term setup until stock not crosses about 2100, 2150 level. It will remain under pressure. On the other hand, if it breaks below 1960, 1970 zone, then it will continue its downtrend, and maybe we can see furthermore a lower level towards 1850 or even 1800 marks also. So as of now, trend is weak for Amber. Don't buy at current level because sustained selling pressure is there on the near term as well as on the short term chart. Breakout will come above 2150 level, then you can buy for short term to as well as for trading perspective also.
Okay, all right. Moving on to the next query then, how is your technical understanding of Piramal Enterprises? Satya wants to know, perhaps interested in buying the stock at the current level. Is it a good idea?
So since last couple of weeks, some buying action has been seen in the Piramal Enterprises. Stock has recovered from its recent low, and 790 was the almost low for the stock, and significant recovery action, price action we have seen in the Piramal Enterprises. Looking at the near-term setup, 920 is the immediate hurdle for the stock. Stock has attempted twice in recent past to cross those levels. But looking at the near-term setup, we believe that sooner or later the stock may give breakout about 920 level. If that breakout happens, then possibly stock can really further higher towards 960, 980 zone. So if you are already holding the position, you can remain invested. Keep your stop loss at around 860. Once the stocks gives breakout about 920, then your target should be around 960, 980 level.
Okay, all right. Moving on to the next query, Jiffin wants to know your view on Borosil Renewables. How's that one looking?
Okay, so stock is still under pressure, and if we analyze the weekly chart, stock is trading in falling channel. On the daily chart, stock is trading below all its important moving averages. So looking at the near term, short term setup, until the stock not crosses above 560 level, it will remain under pressure only. On the other hand, the lower side, the major support area for the stock is at around 510. So for time being, we expect that some consolidation can be there in the stock prices. 510 to 560 is the range where the stock may consolidate. Either side breakout or breakdown will decide the further direction for the stock. But overall, if we analyze, the stock is in weak zone. Maybe on the breakdown of 510, it can slip further towards 460, 450 zone also. So as of now, structure is weak. So our advice is to avoid. If you wish to buy at the current level, avoid at the current level.
Okay, all right. Moving on to Kishore's query then, he wants your advice on MSTC. How's MSTC on the chart?
So after a rally, stock is now consolidating, though stock is trading above all its important moving averages. Looking at the near-term, short-term setup on the weekly chart also, stock is holding its breakout level. So till stock is trading above 305, 308 level, view is positive for the stock. If it continues to hold above 305 level, then possibly one pullback action we can see in the stock in the near term. In the pullback, 340, 350 are the supply zone. So if you are holding your position from the lower level, you can book some profit around 350 zone.
Okay. Prabhu wants to know long-term view for Divi's Labs. Now, Divi's Labs has been a bit of a laggard all of this year. If you look at the 1 month or 6 month chart even, it has been very, very lackluster. What's the way forward likely to be for Divi's?
So overall structure is weak, and again we have seen post earning, whenever the stock has delivered its earning, we have seen a big corrective action in the stock. Still after the corrective action in the last quarter number, stock not able to recover, and still it's trading near to its lower band of the previous correction. So looking at the overall setup, our view is on the bearish side. Near-term setup is suggesting that if it stocks breaks below 3260 level, then possibly it may correct further towards 3160 also. So overall structure is weak. Sell on rise is the strategy until the stock not crosses above 3500, 3540 zone. Whatever pullback will come will meet to the supply pressure on the higher side. So sell on rise is the strategy for Divis left. Wait for a significant pullback action above 3550, then only view will change on the buying side.
Okay, all right. Moving on then to Vani's comment and query. They want your view on Punjab Alkalis. Again, a very, very slow mover last few months. What's the view there?
Karanya, I'm sorry, I'm not able to find out the chart. If you can help me out with the code so that I can look at the stock.
Get it?
Yeah. So yeah. So on the stock is listed only on the BSE. So yes, looking at the overall setup for Punjab Alkali stock after really is consolidating. So looking at the overall setup for the stock, we believe that once the stock crosses above 85 level, then it will extend further more upside momentum towards 95 to 100 level. So if you are holding your position, you can trail your stop loss higher towards 76. If it continues to hold above 76, there is a higher probability that the stock can give breakout above 85. Then possibly next target is around 95 to 100.
Okay, all right. Moving on to the next question. This is from Surya, wants your view on Apollo Tyres. Now, this one has seen a very healthy up move last 1 month. In fact, it's close to its 52-week high levels. Do you think it's a good idea to buy right now, or should one wait for some pullback to happen on the downside and then enter?
Tire is bullish, and stock is holding up above its previous swing high. Looking at the overall setup, stock is forming higher top higher bottom formation since last 7-8 trading session. Stock is consolidating near to its higher band of this rally. So our view is positive for Apollo Tyre. If you are holding your position, you can keep stop loss now at around 305. Once stock manages to cross above 330, 335 zone, then stock will continue its upward momentum, and possibly next target for the Apollo Tyre would be around 365 to 370 zone on the higher side. So our view is positive. Hold your long position with stop loss of 305.
Okay, all right. And Rajesh, what are your own stock calls in the current market? Which stocks are you keeping on your radar?
So one long, one short. The long side, the stock is from the sugar space. We have seen a significant buying action in the last week for sugar space. From that space, we like Balrampur Chini. In the last week move, stock is now trading about 200-day moving average. And strong buying action has been seen on the Balrampur Chini. Looking at the weekly as well as on the monthly chart, there is a breakout. So we believe that Balrampur Chini can continue its upward momentum towards 415 to 420. One can buy with a stop loss of 382. Another stock that on the sell side is Titan. If we analyze the overall setup for Titan, continuously we are seeing that since last 3 months, stock is witnessing some supply pressure. Stock is now slipped below its 50-day as well as 100-day moving average. Looking at the daily chart, stock has given a breakdown of its near-term support area of 2550 zone. So looking at the breakdown on the daily as well as on the weekly chart, we believe that Titan can continue further more downside, and we are expecting target of 2400 to 2380. one can sell Titan future with stop loss of 25.40.
Okay, all right. With that, thank you so much, Rajesh, for joining us and sharing your views and helping our viewers out with a host of their queries, comments, and concerns. With that, it's a wrap on Morning Trade. Thank you for tuning in.